So the NASDAQ continues to pull back. We're looking at the QQQ, which is the ETF that uh, benchmarks the NASDAQ 100. And from the most recent high at 338.22, price closed today at 358.11. And you are about 13 points away before price reaches correction territory, which is a 10% correction from the recent highs. Now let's get into this article before we continue with the analysis. This is coming from Benzinga. Karen O'Leary warns Michael Burry's S&P 500 wager will be painful. Whole different kettle of fish he's playing with. Now, for those who don't know, Michael Burry placed a $1 billion bet in which he is shorting the S&P and the NASDAQ. Now, that $1 billion bet is just the nominal value. His bet was probably a couple of $100,000 using put options. So Shark Tank investor Kevin O'Leary has warned that Michael Burry's bet against the S&P 500 might be a risky move. People that try to live off market timing have a very hard time. You get lucky once, as he did with housing syndication and mortgage debt, but this is a whole different kettle of fish he's playing with. O'Leary's comments come after Burry disclosed his bearish options on ETFs tracking the S&P 500 and the NASDAQ 100, amounting to a notional value of $1.6 billion against these indexes. O'Leary emphasized the diversified nature of these indices and their inherent risk in shorting them. While Burry profited nearly $100 million from the '08 subprime mortgage crisis, O'Leary believes this current bet is different. What he's doing now is completely different. The S&P 500 has 500 mega cap companies in its 11 sectors of the economy, real estate only being one of them. You would need every single sector to falter, or at least the valuation of every company in the S&P to significantly go down at the same time to win on that bet, he explained. Now, when you're dealing with the NASDAQ, which represents the tech sector, and the QQQ, that typically has a higher beta than the S&P 500. And beta just means that for every dollar move that the NASDAQ makes, that move is going to be a bit more violent than, say, a dollar move in the S&P 500. So with that said, let's look at the charts on the QQQ. We're going to start with the monthly chart, and we do have, let's put this in here, we got monthly buyers at the 320 level. And before this current pullback, prices were itching closer to the all-time highs at around the 410 level. And many thought that going back as early as 2 months ago, because we had a great first half in the equity markets, that we were going to definitely have a soft landing. However, the 10-year yield has been increasing, which means that bonds have been going down, which means that inflation is ticking back up again, which means that Powell may raise interest rates at least one more time, and then keep those interest rates high for a larger extended amount of time. So you have folks getting out of the stock market and into bonds because it's just less riskier, and as a result, the market has been correcting. All right, so again, this is the monthly bias level at 320. Let's go down to the weekly chart. And this is a level where the chart suggests that we could see prices turn a bit. Let's pull this back a little bit. Now, why is that? Well, two things. You have a rally in price. You have a couple of base-in candles in the rally out. Price tried to pull back but couldn't, and then rallied higher. Now the fact that price could not take out the all-time highs, this lowers the probability of this area working out where the buyers could bid up price. Nevertheless, it is at least a level where I anticipate price at least stalling. Let's go down to the daily chart. And what you can see is that the momentum moving averages, you got the 13 and 26. We have a bearish crossover. We also have price now taking out the 50-day moving average, but price is coming into that zone that we looked at on the weekly chart. And within that zone, you have the 100-day simple moving average, which should serve as dynamic support. Now this was the structure that we saw on the weekly chart. I'm not in love with it. There's a lot of trading here, and then obviously the buyers moved prices higher. But this is why I think price is at least going to stall a bit, because there was a lot of trading in this level here. Now if the markets continue to tank, because we are entering getting into September, October, which is historically the worst months of the year, I wouldn't be surprised if the 345 level is breached and prices close above it, below it, and makes its way down to the 320 area, which would be a golden opportunity to go long. Let's see what that would be. Now bear market is a 20% correction. So let's see if I do that. Okay, so 20% correction would be price would have to breach the zone here. Again, this is where a lot of the liquidity is found. So price just seeks out liquidity. You know, I should really say the smart money seeks out liquidity because they have tons of orders that they have to unload or load depending on their clients' wishes and needs. But for now, we're just going to move this back to the 10% area. Again, that puts us right in this level here. I'll be looking at these levels over the next week or two, paying attention to it. Who's going to win out? I think right now Murray should be in the black, but you know, according to Kevin, he should not place that bet. Should not have that bet on too long. I don't know when his options expire. Hopefully, gave himself enough time to be correct. Thanks for watching. Subscribe. Please like the video.